It is back to school season and we are excited because this summer was too long and too hot. I went on vacation and came back and it seems that everything pretty much stayed the same in the housing market. However, there are some interesting things to talk about, so keep watching. This is Celina Acosta with your August 2023 market update for the Phoenix, Arizona and the metropolitan area coming up. The median sales price of a home in the Phoenix metro is only 3% lower than what it was exactly a year ago. Not much has changed in the past few months. It is as if both buyers and sellers are stuck in a holding pattern waiting for a sign before making a move. While we are experiencing a typical summer slump that happens here in Phoenix, Arizona, the average days prior to a contract have been holding steady for the past 2 months at 21 days. That's actually pretty good. And that's because buyers are still out there despite the high interest rate. When the interest rates went up over 7% a couple of weeks ago, it was a blow to the gut for the buyers that are active in the market. Mortgage rates have been holding steady in the high 6% and the low 7% range for nearly 3 months, with little signs of a decline yet. And the people that understand that the mortgage rates are probably not going to come down much for the rest of the year are making a move now. However, there are a lot of people in the sidelines. There are actually more people in the sidelines than people in the field. The people in the sidelines are waiting and praying for rates to come down, but they won't. Sorry. We are operating with a supply of homes for sale that is 52% below normal for the past month and 37% below last year's supply count. The ratio between supply and demand is keeping the Phoenix metro in a seller's market still, but it's a very mild seller's market compared to the last 3 years. So why do we have so little inventory? Well, over 60% of homeowners with a mortgage have an interest rate of between 2 to 5%. So these people don't feel very motivated to give up that mortgage to get a 7%. They are not selling unless they have to. What is going on with the home prices is a question I get every day. So let's take a look at what has been happening, and I like to break things down. Since the beginning of this year, from January to February, the median home price in the Phoenix metro went up. From February to March, it went up again. From March to April, it went up again. From May to June, it went up again. And then nothing happened in June and July. It stayed the same. And then from July to August, it actually adjusted down a little bit. Again, it is a typical summer slowdown. And as we speak, we are halfway through August and I can already see September from here. And what happens between September and December is that we get out of the slump. We expect the annual appreciation rate to turn positive again and even return to pre-pandemic levels similar to 2018 and 2019, which had annual appreciation rates of between 5 and 8% on average for each of those years. This is good news for buyers for 2 reasons. First, the latter half of the year is typically the best time for a buyer in Greater Phoenix, as the highest months for closings are in the spring. After June, buyer competition declines until the end of the year, and it gives buyers a little bit of more breathing room to tour homes. Plus, the weather's much nicer in the fall anyway. But buyers get more time to make decisions. Second, buyers understandably like to see their home's value increase after they buy, even if it's just by a little bit, and this happens in the spring. The last quarter of the year also gives an expectation that the uncertainty with the mortgage rates may dissipate towards the end of the year or even the beginning of next year. Mortgage rate predictions continue to be all over the board, so I won't even dare to predict because everybody's always wrong. If the rates do indeed decline over the next 3 months, then expect both buyers and sellers to break their holding pattern and the housing market shall move again. 41% of the closings have seller concessions for the buyer, with a median cost to the seller of $8,000. Offsetting this statistic is a growing number of sales closing over asking price. June saw 21%, July saw 22%, and August is pushing 23% so far. In a normal seller's market, this statistic doesn't exceed 18% and typically peaks in June. So yes, bidding wars are still happening in this market. The median amount over asking price for July closings $6,000, and the majority of the sales last month with both seller concessions and prices over list occurred in homes priced under $600,000. Why do we still have offers going above asking price? Well, just like I told you, we have half of the inventory we normally have. And when a good house hits the market, a house that is priced well and that it offers value, more than one buyer is paying attention and they go and make an offer. The fact that there's still sellers out there giving buyers so much grace and giving them concessions and incentives to buy is another sign that you shouldn't be waiting. So there you have it. I hope this was helpful. Comment below and don't forget to like and follow. And until next time.